This is a very special strategy now. I have a guest. Yes, this is not just Wayne's World here where I sit in my basement or my office all by myself. I have a special guest today. And this special guest happens to be my brother Matt. Matt, how you doing?
Great, Joe. How are you?
I'm good, man.
Good.
I'm excited. My first guest. This is really fun. I'm having fun with this today.
All right.
So, folks, what I thought I'd do today was Matt's here because, well, he's moving. We're going to lose him here from Chicago, and he's going to Houston. And I said, well, Matt, I want you to come on and do a trade today with me. And he's like, all right, whatever. And so you were laughing a little bit about it. But he just had an experience using PayPal. And this week, Apple announced their peer-to-peer ability to move money. And I thought, well, he just had an experience with a peer-to-peer using PayPal. And he thought it was kind of tough. It was a little bit difficult. So there's some work to be done there on the interface. But I said, well, Matt, now you have a trade idea. And he goes, well, what are you talking about? I said, well, let's walk through it. So Matt's going to actually walk through how we walk through every day, looking at a process and setting up a trade. And where we start is, Matt, can you go over and click this right here? And this is a chart of PayPal. Now, right now, that's all right, Matt. You can't break anything. That's your friend. And as you can see, Matt's new to this, folks. So this is a lot like what everybody out there that says, A, I don't have time. B, I don't understand what the heck you're talking about, Joe. And C, there's no way a simple person like this. I mean, he's an immunologist. What the heck does he know about trading?
Nothing.
Well, guess what? You're already a step ahead of the game. Matt, when you look at this, what you're looking at right here, and he's just looking at the screen, and what you're seeing behind Matt is a chart. And Matt, this chart is basically telling you what? When you see these bars and they're going what?
They go up.
Up. Okay, so do you think that's bullish, bearish, or neutral?
Joe, once again, I know nothing about trading.
Right, but if it's going up, what does that mean? What's the trend?
It's going up.
Okay, that means it's bullish.
Bullish.
All right, great. Now, these lines here, these aren't just goofy little lines that somebody puts out here. This is a 20-day, a 50-day, and a 200-day moving average. Look at this. This guy's like Vanna White. You see him just putting the cursor right there for me? This is giving you just support levels, but it's really telling you who's in control. If these bars are above these lines, that means the bulls are in control. Okay? So the stock's bullish.
Great.
But Matt did not have a good experience with PayPal. So even though he sees it's bullish, one thing that you got to notice is it's up here on the top. It's at the highs, right? There's something else notable. They have earnings in 43 days. Over here, you probably can't see that very well online, but in 43 days, they have earnings, so in July. So that's an event, Matt. In your line of work, an event is like if someone calls you and says, I need something immediately, I need you to analyze this and tell me what the risks and rewards are, and then you balance that for them and you give them your opinion. This right here is telling you that there's an event that's coming up in 43 days. That could either be a catalyst to the upside or the downside. But now you have these levels to watch to say, well, if it's going to be bad for PayPal and the stock starts to pull down, if it breaks this level and this level, that means that the bulls have started to lose control. Okay? And the upside, that trend that you've seen could be in trouble. So with this, even though you have a bullish trending stock, you're going to go counter. And I know you're a contrarian. You're beautiful at this. All right. So what I want you to do is click on here. Now, Matt, this is your account.
Oh, great.
This is real money. And so Matt's going to place a trade. So what I want you to type in here, Matt, is PYPL.
PYPL.
Right. And then you see that says PayPal. Just click on that.
Mm-hmm.
Okay. Now I want you to go over here to strategy, and I want you to do create my own. And then I want you to just scroll down. And down here is what we call an options chain. And right here, I want you to say display the Greeks. Now, we're not going to go into a Greeks class, and just hit this so that we can see all of the expiration months. One rule that we have here, that I have, and that I throw out here at MarketStream is we want to look at with something with time when we're going to put a position on. And when you're using options, you want about 45 days. So that's going to click that plus sign after the July 21st. That's roughly 43 days until these options expire. Now, Matt, would you consider yourself a conservative investor?
Yes.
Okay. And you're new?
Correct.
Okay. So there's a couple little quick cheats that I can give you so that you can start putting probability of potential success on your side. You were bearish, or you're a little bit negative on the stock because of that experience. So you want to take advantage of maybe seeing some downside. Okay? So that would be looking at buying a put. Now, I don't like buying options outright. So take a look at something with a delta of about 70 or better. Now, delta is this column here. If you scroll down, okay, that's the 57.5 put. So just double click in there, or one click, that's good. This means that you're buying the option. Now, this option is $57.5 put. That means that you're getting short the stock at $57.5. To put that in context, Matt, the stock's trading at 53. These are already in the money. So you already have value here. As a matter of fact, there's only 39 cents of extrinsic value at time and volatility. What does that mean? That's what's going to work against you right now. But you're basically getting short a $57 stock, which means that if you were to sell this in your account right now, you'd have to have $5,700 of cash, and then every penny it keeps going up, that's going to work against you. When you buy a put, which right now the offer is $4.45, that means you can be short the market for $445. That's your risk. So if PayPal goes through the roof, you're not get hurt. You're just losing $445. But you want to offset that purchase price, and what we're going to do is we're going to sell the $52.5 calls. All right. The reason why is these only have a 38% probability. That's that delta that you see right here, right there. 38% probability of being in the money. I'm going to sell those, give up some downside, but that's going to offset my purchase price. So double click on this. Go over here. Double one more time. Oh, you're really quick on that. Wow.
Yeah.
A little day trader here in the making. All right. Now scroll up. And so what Matt has set up is that he's going to buy the $57.5 puts. All right. Buy to open and put quantity. Let's just say 1. Okay. You're new. This is your first trade today.
Dipping my toe.
Right, dipping your toe in. You're going to sell to offset that purchase price the $52.5 puts. All right, and you're going to put one con. Look at that. You're already, boom, boom, you're thinking. All right. Now what you want to do is go over here in the limit. We always put a limit price in. The current bid ask for this is $304 at $318. What I want to do, let's put in $3.10. So you just, $3.10. Now, their max profit on this, Matt, is the difference between these strike prices. 57.5 to 52, that's $5.
Yeah.
But you have to take into consideration you're paying 3. So really your max profit potential is going to be $1.90. Okay. So you could make $190 and you're risking $310. Does that feel all right?
That feels good.
Okay. The other thing is that your break-even point is actually below where the market, above where the market's trading. Specifically, it's right around the stock's trading at 53.39. The stock could go up to 53.59, and you're still okay. You're still going to be break even. Okay, so it goes up a couple cents. Now, do me a favor, scroll down and click Review Order. Now, Matt has just done some quick analysis. He saw that his stock has been trending to the upside, grinding a little bit. And it has earnings in July, but he just had kind of a negative experience with something. And so he's looking at it going as a consumer, as a user, and the fact that this thing looks like it's really getting a little toppy. The market has a lot going on. There's uncertainty, even though it's been grinding to the upside. Matt's going to take a $310 risk to potentially make $190. Now, he'll manage this. We'll talk more after we get off this segment about how he can manage the risk of this trade and taking profits. But he's very comfortable saying, I'm willing to risk $310. Click place order. Congratulations. Nice job, buddy. All right, Matt's working it right now. You can see right now he's a little away from the market. It's trading at 321. But hey, we're here all day. And Matt can monitor this. If he's filled, then he's going to manage his risk. Congratulations, man.
Thanks, Joe.
Thanks for coming.
Hey,
all right, folks. We're going to be back this afternoon. I'm going to do the closing bell. I want to thank Matt for coming. I'm going to have to Skype him in from Houston when we're going to have to keep doing this. He's going to be my biotech expert. I might have to get his wife on, too, because I think she's a little bit smarter on that end. But anyways, thank you, Matt. Thanks, everybody, for watching. We'll be on at 4:30 Eastern, 3:30 Central. We're going to be wrapping up all the action today. See you then.